Hello traders, and welcome back to Explain the Charts. Today is September 30th, 2025, and we're taking a deep dive into Ethereum, or ETHUSD. The market is sending some very mixed signals right now, so we'll start by breaking down the latest news before we jump into the charts. First, we're seeing some bullish headlines, with Cointelegraph reporting that traders are positioning for a price recovery in October, with some even predicting a pump after ETH reclaimed the $4,000 level. There's also continued talk of strong institutional interest, with firms like Bitmain now holding nearly 2% of the total ETH supply and Wall Street adoption potentially triggering a supercycle. However, the bearish news is just as compelling. We've seen reports of a whale losing over $45 million during a recent price plunge below $4,000 just a few days ago. This dip was fueled by macroeconomic fears, like a potential U.S. government shutdown, which triggered widespread liquidations. Adding to the bearish pressure, we've seen 5 consecutive days of spot Ether ETF outflows, totaling hundreds of millions, which suggests weakening retail and institutional participation in the short term. Another key point from FX Street is that funding rates have turned negative, meaning futures traders are increasingly bearish and are paying a premium to hold short positions. Historically, this can lead to lagging prices, but it also sets the stage for a potential short squeeze if sentiment reverses. Now, let's see how this news landscape translates to the price action on our daily chart. As you can see, Ethereum has had an incredibly volatile couple of months. We saw a massive rally from the lows around $3,200 in early August, culminating in a peak just shy of $4,900 on August 24th. This peak now stands as our most significant long-term resistance level to watch. Since that high, the price has entered a corrective phase, which is where things get interesting. The price fell sharply, breaking below several support levels until it found a bottom around $3,832 on September 25th. This lines up perfectly with the news reports of the dip below $4,000 and aligns with a key Fibonacci retracement level. This $3,800 area has now established itself as a critical short-term support. Since that low, we've seen a strong rebound, with the price decisively reclaiming the psychological $4,000 level. Yesterday's candle closed strong at $4,216, showing bullish momentum in the immediate short term. However, we are still trading significantly below the August highs, so we're in a bit of a no-man's land right now. The previous consolidation zone between $3,200 and $3,600 should be considered a major demand zone and a crucial area of support if the current levels fail to hold. Let's switch to the 15-minute chart to get a closer look at that recent volatility. I've filtered the chart to show the price action from September 25th through the 26th. Here you can see the dramatic sell-off that took ETH below $4,000, confirming those news reports of liquidations. The price cascaded down, hitting its low before buyers aggressively stepped in, creating a sharp V-shaped recovery. This powerful bounce from the $3,800s shows that there was significant demand at that level. Following the bounce, the price began to consolidate, building a base of support before making its next move up. This kind of price action is classic after a liquidation cascade, as the market finds its footing. Now let's look at the most recent price action from the last 24 hours. We can see the market has been in a clear uptrend since breaking out of that post-crash consolidation. The price has been making a series of higher highs and higher lows on this time frame, which is a bullish sign. We successfully broke and held above the $4,200 level yesterday, which is now acting as immediate support. The trading volume has been consistent during this push higher, suggesting conviction behind the move. An intraday resistance seems to be forming around the $4,250 mark, where the price has paused a few times. A clean break above this level could signal the next leg up for the short term. Conversely, a break back below the $4,200 support would be the first sign of weakness and could lead to a retest of lower levels. Okay, let's switch back to the daily chart to recap and discuss what to look for next. To summarize, the key price levels are clear. Major resistance is at the August high, near $4,800 to $4,900. A more immediate resistance area to watch is around the $4,500 psychological level. On the downside, we have immediate support at $4,200, followed by the major psychological and technical level at $4,000. If $4,000 breaks, the next critical support is the recent low around $3,800. Below that, the major demand zone lies between $3,200 and $3,600. So, what are the likely scenarios? In a bullish case, which I'd place at about a 60% probability, the negative funding rates could trigger a short squeeze. If ETH can hold above $4,200 and break past $4,300, we could see a rapid move to test the $4,500 resistance. Positive news on the macro front or a reversal in ETF flows would strongly reinforce this scenario. In a bearish case, with a 40% probability, a failure to hold the $4,000 support would be a significant sign of weakness. This could be triggered by continued ETF outflows or negative market-wide news. A break of $4,000 would likely send us back down to test the $3,800 lows. If that level fails, a deeper correction towards the $3,500 support zone becomes highly probable. Things to watch for in the coming days are any updates on the potential U.S. government shutdown, the next set of spot ETF flow data, and the upcoming non-farm payroll numbers, as these could all be major catalysts. That's all for today's analysis of ETHUSD. Always remember to do your own research and manage your risk. If you found this video helpful, please hit the like button, subscribe to Explain the Charts, and ring the bell so you don't miss our next update. Trade safe, and we'll see you next time.